Hello, welcome to Moo-ney Talk with Alan. Cathie Wood is arguably one of the most popular fund managers on the newspaper headlines. Her flagship $21 billion ARK Innovation ETF, ARKK, has returned an average of nearly 45% annually over the past 5 years. Wood is also known for being one of the biggest boosters of Elon Musk's Tesla, and the boom in the electric car maker contributed significantly to ARK's astonishing return of 150% in 2020. Until a few months ago, no one was dared to question Wood's investment decisions, but things have changed now. Michael Burry, the investor made famous by the Big Short movie, one who successfully predicted the 2008 financial crisis and made huge money from it, has now taken aim at one of Wall Street's hottest stars. According to a regulatory filing on 16th of August 2021, Burry's CN Asset Management entered into Burry's put contract against 235,500 shares of ARK at the end of the second quarter, and this position was valued at almost $31 million. Burry is not alone in this. By the end of last month, a record of 11.63% of the ARK shares are being shorted by investors betting on a decline worth $2.6 billion. At the start of this year, the tally stood at just $0.4 billion. That's 7 times smaller than now. Short position is an important indicator to monitor the market sentiment on the stock, and the moomoo offers you the perfect tool to access it. Let's input ARKK in the search bar. Navigate to the page for the stock. Click Analysis. There you can find the short interest. Moomoo shows the percentage of total shares being shorted, the short positions open at the time, and the average daily short volume. Again, the great thing about short interest is that it gives us a quantitative approach to measure the market sentiment. Here's an eye-opener. Go try this feature on your favorite stock or a buzzy meme stock like GME. I'm sure you'll discover some pretty interesting findings. Some investors that had been waiting in 2021 for the fund to repeat its success last year have lost faith and pulled out. ARKK recorded its largest monthly outflow of net money for the year in July, and according to ETF.com, it's worth over $900 million. During the rising skepticism emerged a new ETF designed specifically to take the opposite side of Cathie Wood, the SARK. Untitled Chapter Management, a provider of thematic and active ETFs, has forged plans to launch the short ARKK ETF known as SARK. The prospectus was filed to SEC on 31st of July 2021. To date, it's still under review, and this typically takes the regulator around 45 days. Inverse ETFs have been around for a long time, but mostly bet against a broad market index, commodity, or a particular sector rather than an actively managed portfolio like ARK's. And this is where things get interesting. According to the prospectus, SARK will attempt to achieve the inverse return of ARK through a swap contract. A swap is a contract between two parties where they agree to exchange things at a given time. For example, Tom has a cheese and Jerry has a fish. Tom and Jerry agree that on tomorrow, Tom will exchange the cheese with Jerry for a fish. They entered into a contract today, and this contract is called swap. SARK will enter into such swaps with some major global financial institutions, also known as the banks. These swaps are customized, so there's no way for us to know the exact terms right now. But typically for this kind of swaps, SARK will give the banks a floating or fixed fee, and the bank will give SARK the inverse of the return on ARK. SARK plans to charge a 0.75% operating expense, mirroring the expense ratio of ARK. However, keep in mind, this is not the only cost to the investors. Because swap is a derivative, there are some other embedded costs for the swaps. And when purchasing ETFs in the market, the bid-ask spread could also be an indirect cost to our investment. One last point worth mentioning is that SARK rebalances their portfolio on a daily basis, and it is stated very clearly in their prospectus that the fund intends to track the inverse return of ARK for a single day, not for any other period. We will not go too much into the math to explain the theory behind it, but in a nutshell, the fund will have a harder time returning the exact inverse of ARK Innovation's performance if the market fluctuates or goes sideways. This makes the inverse ETF more appropriate for short-term strategies rather than a long-term investment. Here's the tea. Cathie Wood certainly don't agree with the idea of shorting her fund. Right after the short goes public, Wood called out Burry on Twitter saying that he doesn't understand the innovation space at all. Where do you stand between Team Cathie Wood and Team Burry? Let me know your choice in the comment section below. And remember to try out our tips on the short interest for your favorite stocks. No stocks mentioned in this video are to be considered as investment advice. Cautious investing and always do our research. Thanks for watching. Please give us a like and subscribe to our channel. Stay tuned and see you around. Bye bye.